This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Thursday, July 30, 2026, and this is the New York session. Now, let's get into it. Bitcoin is holding above $64,000, but the market mood is anything but stable. The Fear and Greed Index is sitting at a crushing 14, deep in extreme fear territory. With the Fed's rate decision landing today and headlines pointing to falling futures demand, we are in a high-stakes environment where every tick matters. Is this the bottom, or are we still falling? Let's get to work. Before we dig into the charts, here is the calendar for the rest of the day. The headline event is the Federal Open Market Committee rate decision, dropping today, July 30th. This is the single most important data point for liquidity across all risk assets right now. Immediately following that, at 2 p.m. Eastern, we have the initial jobless claims report. Then, we have a triple header of economic data: gross domestic product for the second quarter, the personal consumption, expenditures price index, and consumer sentiment figures. For crypto, the market is pricing in a hold or a slight cut, but the real story is what the Fed says about the path forward. Apex, what is the one thing you want listeners to watch for in that statement?
I'm watching the language on transitory versus structural inflation. If they signal that the 2% target is still a long way off, we won't get a liquidity boost. The market needs clarity, not just a number.
Let's look at the tape. Bitcoin is trading at $64,782, up 0.7%. Ethereum is at $1,923, also up 0.6. Solana is holding $74.28, up 0.8. Across the board, the major caps are green, but the broader crypto market cap is down less than 1%. Bitcoin dominance is at 56.7%. The VIX closed at 18.21 yesterday, showing normal volatility, but the sentiment data tells a different story. Total crypto volume is sitting at $68 billion. It's a quiet day on the surface, but the pressure is building. Let's look at the news flow. Headlines are moving, and they are mixed. First, Cointelegraph reports that Bitcoin futures demand has fallen to 2024 lows. This raises the question, are institutions exiting or just waiting? Second, TD Securities is calling the NYSE tokenization process an institutional turning point, suggesting deep structural adoption is coming. And third, the U.S. Senate housing bill now includes a CBDC ban, a significant regulatory development for XRP. CIPHER, where is the money actually moving given these conflicting signals?
Headline about falling futures demand is a flow trap. If we look at the funding rates, Bitcoin is still paying long funding at positive 90 basis points annualized. That means leveraged longs are still paying shorts to hold positions. The exit is retail leverage unwinding, not institutional treasury diversions. Meanwhile, stablecoin net flows are flat, meaning no new cash is entering, but no massive outflow is happening either. We are in a liquidity freeze.
And that freeze is dangerous when the VIX is rising. Yesterday, the VIX closed at 18.21, but the term structure is in contango, which is usually good. However, the VVIX, volatility of volatility, is at 109, which is unstable. If the Fed surprises hawkishly tomorrow, that contango could snap. The risk here is not that the price drops tomorrow, but that the volatility spikes and forces margin calls on these leveraged longs.
The sentiment data backs SPECTER up. The Fear and Greed Index is at 14. That is not waiting for clarity. That is panic. When retail is this scared, they sell into green candles. The fact that we are up on the day but sentiment is this low means the rally is shallow. It's a dead cat bounce, not a reversal. Let's break this down by asset, starting with the king. Bitcoin is at $64,782. Grid, what does the structure look like?
The structure is fragile. Bitcoin is testing the 64,000 level, which has been resistance for the last 3 sessions. On the hourly chart, we are seeing a lower low pattern forming. The 50-hour moving average is sloping down and price is below it. Volume is declining on these green candles, which is a classic divergence. I am not seeing a break of structure yet. The key level to watch is 63,800. If that breaks, we open the door to 62,000.
Grid is right about the structure, but let's look at the on-chain data. The exchange net flow for Bitcoin is negative for the third day in a row. Whales are moving coins off exchanges. This contradicts the futures demand falling headline. The long-term holders are accumulating, while the short-term speculative crowd is rotating out. This is a classic distribution phase. The smart money is not selling, they are just letting the weak hands bleed.
But CIPHER, you can't ignore the crowd psychology. Reddit threads are filled with give-back comments. The social volume is spiking, but the sentiment score is deeply negative. When social volume goes up but sentiment goes down, it usually means the selling pressure is coming from emotional retail, not smart money. However, that selling pressure is still real. Until sentiment flips to neutral, Bitcoin is fighting an uphill battle.
I want to challenge the bullish take on the on-chain data. Just because whales are moving to cold storage doesn't mean they won't sell when the price hits a target. Look at the daily RSI. It's neutral, not oversold. There is no bullish divergence on the daily chart. The accumulation could just be long-term holders hedging their exposure. If the Fed holds rates and signals higher for longer, that cold storage doesn't matter. The price action will dictate the narrative, not the wallet addresses.
Moving to Ethereum. It's trading at $1,923, up 0.6%. Apex, you've been following the tokenization narrative. How does Ethereum fit into this risk-off environment?
Ethereum is decoupling slightly from Bitcoin's fear. While Bitcoin is grinding sideways, Ethereum is showing relative strength. The TD Securities headline about NYSE tokenization is fundamental fuel for Ethereum. If institutional capital flows into tokenized assets, Ethereum's smart contract layer is the primary beneficiary. However, technically, the Ethereum/Bitcoin pair is weak. It's trading at a multi-month low. The market is still pricing Ethereum as a high beta tech stock, rather than a settlement layer. Until that narrative shifts, Ethereum is tethered to the broader risk-on sentiment.
On-chain, Ethereum's TVL is flat, but the activity on Layer 2s is increasing. Transaction fees are low, which is good for retail, but bad for staking rewards. The deflationary pressure is minimal right now. We need a surge in activity to turn Ethereum into a yield-generating asset again. Right now, it's just a store of value like Bitcoin, but without the brand recognition.
Technically, Ethereum is holding the 1,900 level. This was support in June. If we hold this, we could see a retest of 2,000, but the volume is thin. I'm watching the 2,100 level as immediate resistance. A close above that is required to confirm any bullish momentum. Until then, we are in a consolidation channel.
The risk here is a correlation breakdown. If the S&P 500 sells off on bad FOMC news, Ethereum will follow, likely with more volatility than Bitcoin. The VIX is rising, and tech stocks are vulnerable. Ethereum is essentially a leveraged bet on the Nasdaq. If the Nasdaq breaks below its 50-day moving average, Ethereum will not survive unscathed.
Let's talk Solana. It's at $74.28, up 0.8%. Solana is often the canary in the coal mine for risk-on sentiment.
Solana is showing relative strength. It is holding above the $73 support level. The hickcake pattern I see on the hourly chart is bearish, but the broader daily structure is bullish. The higher low formation suggests that buyers are stepping in at $65. The key is volume. If we break $75 with volume, the next target is $80. But if we fail to break 75, the hickcake pattern will trigger a move back to 72.
Solana's network health is improving, hash rate is stable, and transaction throughput is high. The community is active, and the developer activity is robust. This is a strong fundamental backdrop. However, the funding rate for Solana is negative at -4 basis points. Shorts are paying longs. This suggests that the recent rally is being short-squeezed, not driven by new spot buying. A short squeeze is a volatile, short-lived event. Once the shorts cover, the selling pressure returns.
The sentiment on Solana is actually more optimistic than Bitcoin. Reddit is buzzing about network upgrades and new ETH collections. This cult mentality can sustain price in a bull market, but in extreme fear, it often leads to a sharper correction when the hype fades. The crowd is betting on a reversal, but the data shows they are leveraged short. If the market turns, Solana will be the first to get liquidated.
I agree with CIPHER. The negative funding rate is a warning. It means the market is crowded on the short side. A squeeze up is possible, but it's risky. If the FOMC statement is hawkish, that squeeze will reverse instantly and the short covering will turn into aggressive selling. The risk-reward for chasing Solana higher is poor. The downside risk is amplified by the leverage.
Finally, XRP. It's flat at $1.08. The CBDC ban in the Senate housing bill is a major regulatory tailwind. XRP is the quietest asset in the market right now. It's not moving with the herd. This is a sign of accumulation. The community is patient. The CBDC ban removes a major overhang. The fear of a government-issued digital currency displacing XRP is gone. This is a fundamental shift.
On-chain, XRP's reserve account is inactive, but the escrow releases are steady. The supply is not flooding the market. The flat price action suggests that sellers are exhausted. There is no volume to drive the price down. This is a low liquidity equilibrium. It's boring, but it's stable.
Technically, XRP is range-bound between $1.04 and $1.12. It's consolidating. The break of this range will determine the next move. A break above $1.12 would be bullish, but it needs volume. A break below $1.04 would be bearish. Currently, it's a coin flip. I'm waiting for breakout confirmation.
The risk here is regulatory clarity. The CBDC ban is a bill, not law. It still needs to pass the House and the President. If that stalls, the narrative weakens. Also, XRP has underperformed for 2 years. It's a dead money trade for many. If the market rallies, traders might rotate out of XRP into Bitcoin or Solana. The opportunity cost is high.
Apex tie it all together. We have extreme fear, falling futures demand, but strong on-chain accumulation and a bullish regulatory narrative for XRP. What is the take?
The market is at an inflection point. Pulse sentiment data shows we are at the bottom of the fear cycle, which is usually a good place to be, but grid technicals show we are still in a downtrend. CIPHER flow data suggests smart money is accumulating, but SPECTER volatility warning reminds us that a Fed surprise could shake out the weak hands. My view is neutral to cautiously bullish. We are likely consolidating at the bottom. The upside is limited until the FOMC provides clarity, but the downside risk is also diminishing. We are in a wait-and-see mode.
Key takeaways for today. First, Bitcoin is holding support at 64,000, but volume is thin. Second, Ethereum is decoupling slightly due to tokenization narratives, but remains tethered to tech stocks. Third, Solana's short squeeze is a warning sign of leverage, not fundamental strength. And finally, XRP is consolidating ahead of potential regulatory clarity. The key event is the FOMC decision today. Stay tuned, stay calm, and keep your risk management tight. The crowd is too fearful to sell, and smart money is accumulating. The fear and greed index will likely rise as the week progresses. My weekly call, Bitcoin bullish, target $66,000 by Friday.
Bitcoin needs to break 64,000 with volume to confirm a reversal. If it does, the next resistance is at 66,000. If it doesn't, we drop to 63,000. I'm assuming the breakout happens. My weekly call, Bitcoin bullish, target $66,000 by Friday.
Stablecoin inflows are picking up, and whales are accumulating. The on-chain data supports a move higher. My weekly call, Bitcoin bullish, target $66,000 by Friday.
I still see risk. The VIX is rising and the Fed could surprise. If the market drops, I wouldn't be surprised. But if the market holds, the oversold conditions could drive a relief rally. My weekly call, Bitcoin neutral, targets $64,500 by Friday.
Synthesizing the sentiment, technicals, and flows, I see a consolidation phase ending with a breakout. The risk is on the downside, but the reward is on the upside. My weekly call, Bitcoin bullish, target $66,000 by Friday.
We have 4 bulls and 1 neutral. The consensus is leaning bullish for the week, with a target of $66,000 for Bitcoin. If you're finding value in this analysis, support the project at patreon.com/ShadowQuant. Patrons get early access to every episode, weekly AI analyst scorecards, and daily intelligence briefs. And if you're listening on Spotify, Apple Podcasts, or YouTube, hit that follow button and leave a rating. It helps more traders discover the show. We appreciate you. This content is generated by artificial intelligence and is for informational and entertainment purposes only. It does not constitute financial advice. Crypto markets are highly volatile. Always do your own research before making any investment decisions. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the after-hours session where we will see how these calls play out. Until then, trade safe.